Okay, for today's recap for this week, we start off with Monday, July 27th, and you can see as Monday pre-market, the market was gapping down after a big sell-off last week on Friday, and coming into multi-month lows. So my approach for the market was obviously to trade a little smaller and a little less, to see how the market reacts to it. I did think the market was short-term oversold, so I wanted to step in and be a buyer of weakness, but obviously, as usual, I'm going to wait for some sort of reversal signal. I don't want to be the first one in there all the time. I want to make sure the market itself, the institutional and the big money flow is actually stepping up there and reversing stocks off support levels or from really deep oversold levels before I commit. And obviously the focus for the week, obviously it was going to set up some sort of turnaround Tuesday as we had July's month end coming into play. So I thought it was going to be a good opportunity to start scaling in Monday and Tuesday for potential bounce. I did have my eye on a number of our liquid momentum and emerging growth stocks, which are the stronger names relative strength-wise and fundamentally from our perspective in the market. So I wanted to focus on them for sure as buying opportunities. One of the first trades I was looking at was Google as a bounce candidate, and I believe it is a $600 stock. So I was looking at the AUG 650 calls, and before we start off, go to Google. I will show that this is what the market, the SPY, was doing last week, and this is the situation we were looking at on Monday morning. So there was potential for it to come down to maybe 206, 205 if the selling was really going to get aggressive. So that's why I was kind of hesitant about being a buyer. But once the opening came around, there's some leaders that were holding it pretty well, and one that I had on my radar was Google right here. Coming down to the 650 area, and I saw it reversing back up above Friday's low and close into positive territory right around 643 here. So I was willing to pick up some of the 650 calls, and made a nice, pretty decent trade initially as the market stabilized. It didn't run up as high as 667 for about a 10-point gain to sell some profits into, and then just kind of sit with it for a swing above this 650 level. Unfortunately, it didn't really couldn't really see much follow through with the rest of the market this week, which is a concern. But it also did not take out our stop level around 650. So came close, and it tinkered back and forth to hit the neutral level. But overall, it did manage to hold up to keep us in the position, at least a small position, after taking some initial partial profits. Next trade I was looking at was my MDY. I did have that as a swing short, which I was using as a hedge. I did get short back here on this pullback around July, I believe 15th or 16th was the day that it started breaking down here, that I jumped in as a short, mostly as a hedge against the current long positions that I was holding in the market. And for the last couple of days, it's been acting fantastic. We caught maybe about an 8-point gain all the way down to 266. And again, this was Monday morning, so definitely was trimming some profits here to help offset losses, elsewhere that we had taken the week prior, and was looking to really just whittle it down as it started to look really deeply oversold here, and as a potential bounce was setting up for that turnaround Tuesday. Let's see. Facebook, on Monday was also it's one of our stronger stocks from our focus list, and it was kind of pulling back into the 10-day moving average here around 94, and early trade it kind of made that reversal and decided to go long once it got back above Friday's close here around 96. You can't tell here on the daily, but on the intraday chart, it did actually probe 96 and reverse back into it. So I took a small long there, thinking with earnings coming up in 2 days and the market was oversold, that this kind of bull flag pattern would see the price at least come back up to the 98 level prior to earnings. If we were really lucky, they would run it up to new high ground prior to earnings. Unfortunately, that wasn't the case. Despite the market stabilizing, Facebook managed to sell off throughout the day, and it eventually we took the loss of about $2, right around 94. Um, the next day, I probably could have jumped back in when the market started rallying on Tuesday, but by that time I was hesitant because earnings were the night before and it had already sold off here, so it was showing some sort of relative weakness. I just wasn't really interested in jumping back in it. Um, Turns out it did play out the way I was expecting. It would have been nice to pick it up again at 94 or even 95 because they did push it as high as 97 prior to earnings, which was the initial move I was looking for. Um, but you can't win them all. So after earnings, you see it was weak and it gapped down, held the 20-day moving average and this gap right here, this gap support. But I wasn't really interested in playing it at that time. Um, Another trade we were looking at, VLO. I got stopped out of my remaining swing balance on that for about a 3-point gain. The initial trade that we took was on this breakout. Actually, I apologize. It was actually on this rally out of this pullback here. The stock broke out in late June. Managed to get like a little 3-day pullback here, and we picked it up around the 64 area. So we did see a nice run from 64 to 68 in a short time frame. And then I was just kind of holding the balance of the remaining position right around 64, 65 area. And you can see on Monday it did pull back in to stop us out of that balance. But overall, we did net about a 5-point gain on that. CMCM was up the next one. Again, China stock, I believe, and I just kind of picked this one up, I believe, on this breakout over here a week prior, and we did catch the initial spike, squeeze higher here from about $27 to $30, which was nice, but then it came back in, and once it gapped down on Monday, it started to eat away at those profits the partial profits that we had taken the week before, so I just closed it out for the wasn't a loss, but it was a small gain. Data was another one that we took. Again, this was kind of my similar take on the Facebook strategy I was thinking, where we had a strong leading stock from our focus lists, and it was pulling back to the 10-day moving average, and it looked like a good trade. The market was oversold. It could bounce up to 130, potentially into new high ground ahead of earnings, and so I took the trade around 128, risking $3. I risked $3 because the ATR was about $3 on this stock, and unfortunately, pretty much as soon as we got filled, the stock price started coming in really hard and took us out for the loss for about $3. Next day, again, I didn't feel like jumping in the day ahead of earnings, and that's probably a good thing too because they did crush the stock completely, down for about a 20% loss on earnings. Next stock on Monday was LMT. Really nice strong setup here, strong momentum here in early July, so this pullback was just something beautiful. We had about a 5-day pullback setting up here, came down right to the 10-day moving average, which is this red line. Everything's in context of the uptrend. It's a bull flag on Monday. As soon as it started to lift out of this pattern here around 202, 203, let me remind myself, I'm sorry, it was 201.40. It was the reversal back above Friday's low and close that I was interested in. So I took a position there, half size. We bought the calls, I believe, because it's a $200 stock. We bought the 195 calls for about $8. And next day, got a really nice pop for about a $3 gain. And then the following day, stock took off, broke out to new highs for about a $8, $9 gain. The calls, I believe, were almost 70% gain in the calls, I believe. I'll have to go check. Yeah, so we're still holding the swing in that one. Looks great above the 10-day moving average, above our break-even point. That was pretty much Monday's trades. Tuesday, I was looking for that turnaround Tuesday, especially in energy stocks. Energy stocks have been absolutely crushed, and the ERX is the triple-weighted energy ETF. So this is what it looked like on Monday after multiple days down, just getting absolutely hammered. I was just looking for some type of reversal signal after this doji day, and on Tuesday, we jumped in as it started to take out the Monday high here at $39. Initially, we caught a nice $2 move up to 41, and we held overnight, and we caught a nice gain to 42.50, and that was pretty much the end of it. We stopped down the balance today as price came back into the mid 39 area, back below 40. But overall, it was a nice trade for about two and a half, $3 gain. Another couple of names that are on my radar list for bounce was UTX and Monsanto. Just quick looking at those, here's Monsanto, just a 2-week downtrend, crushed almost every day last to the prior week, came down to the $100 psychological level, just looked like a good spot to start picking some up. As soon as it started to reverse, we bought some, and if you held on, you caught a nice. The high here today was about 103.62, so we caught about a $3 gain in that over the last 3 days. Another name that was on the radar that was looking pretty oversold was United Technologies, symbol UTX. Got hit hard after earnings and then started selling off with the market the next 3-4 days. Once it broke the $100 level, again, it's a psychological level. Usually it's pretty good for a bounce. 98 came around, had this doji here on Monday, and looked like a good time, an opportunity to start scaling in with an oversold market that looked like it was set up for a turnaround Tuesday. Was a little late to the party there on Tuesday. Just kind of retested 98. Didn't really make much showing, but with our stop loss, I think we put a $2 stop loss on it. The average daily range was we had about $2 stop there. Could have bought the 97 calls as well for 275. So you had to give the stock a little bit of wiggle room, at least of $2. While it's oversold here with the market. And it turned out it worked out pretty well for us. Came back to the 10-day moving average, came down to meet price as it was on the way up, up to the 101.5 area, which was good for a solid 2.5 point gain. LMT extended. Yelp. Yelp was an interesting earnings play. I don't normally like to go after stocks that gap significantly, but my logic behind Yelp was that it has been a severe underperformer, for the almost a full year right now. Just absolutely crushed off last fall's highs. So in my mind, there's no real institutional buying going on in this stock. If anything, it's more funds and hedge funds that are really playing this on the short side. And you can tell from just the way it's been acting, gapping down, selling off, that it was just a really weak stock. And going into July, you could see that it sold off hard and it was just kind of consolidating here. And I just didn't see it as a heavily institutionally owned stock on the long side. So when price gapped down 25% in reaction to earnings, it seemed like anyone that was trying to bottom pick the stock here, it was just getting blown out completely. It was a super extended weak stock, and I just couldn't see anybody who was short the stock for multiple months. This was an opportunity to start locking in profits. It was not an opportunity to start shorting more. And even if you were long this stock, you had to blow it out of your account just to make the month-end numbers. So this just seemed like a prime stock that, in my mind, was going to be set up for some sort of bounce, after the first hour settled down. So it was definitely on the radar. There was an opening reversal. If I go to the intraday chart, you can see that I wanted to be a buyer above the 25 level, which really didn't take hold until later on in the afternoon. But I did take an early entry right here around the mid 24 area, just because it just seemed like a decent spot, and I was willing to start scaling in because of that logic that I just explained. That I thought it was good to be a buyer in the mid 24s, potentially even down to the mid 23 area, risking about $1 or $2 for a swing. It turns out it did play out very well. As the mid 24s, it went up to a high of about mid 27s in just 3 days, which is a nice 12% gain on our position that we scaled out some profits into. At the same time, I believe I had Twitter as a short. that same day. Now, Twitter is kind of the opposite way. Even though it's been a laggard, it seems like there's a lot of positive activity that's been flowing around the stock lately. So, and there's actually been a ton of rumors, it seems like, that come out and say it's going to be a takeover candidate. So it just tells me that the bias on this stock is more bullish than, say, Yelp, but it just seems like everyone wants to be long this stock. So I felt like when it gapped down in response to earnings, that there was going to be more positions trapped in this stock as opposed to being shorted. So when it broke down, we kind of stabilized around the opening range. I couldn't get much of a bounce going, and so I took the short right about around 32 and a quarter, 32.15, as I couldn't hold the opening range on, I believe it was Wednesday. And it worked out nice for a short for about $1 gain, and just kind of sitting with it as a swing. Longer term, if you look at the monthly chart of this, it's pretty close to its post-IPO lows, which is sit around $30 here. And if I had to guess, it's struggling here to get back up above this support that it broke down. So I would say that it's probably more likely it's going to take it out to make new, fresh all-time lows here before it can reverse and get back above that level. August is a new month, so maybe I could be wrong here. It could reverse right back up, but we'll see. Cyber was on my radar. There was no entry that day on Wednesday, but I definitely like the support level. Um, I can just skip to that right now. So Cyber, I actually took a long in it today. Um, the support level I was watching was this gap here from a week ago. Came up to test the 50, pulled back a little bit, and just started getting these nice tails on these candlestick patterns here, suggesting that there was buyers at this level around 59, 58. Started to hold this gap here. Once it cleared back above 60 today, I felt like it was a decent opportunity to maybe start a small swing long position in the name. With this support level right below you. So it's about a $2 to $3 risk. We'll see how it plays out. Maybe early August, some buyers come in here and push the stock back up to this level ahead of earnings. We'll see. ESXR never triggered. It was on my short radar. Monsanto had a couple follow-ups here. I went over these trades already. Celgene was a trade that we took yesterday. Again, it's one of these leading stocks, leading biotech stocks from our focus lists. So once anytime a leading stock comes into a key support level, like a gap support level or a key moving average at the 20-day, I'm always going to start looking at it for a quick opportunity. And it sold down below the 130 level, and that's when I suggested that we should probably consider taking a small position, scale into the stock a little bit. And it turned out it was correct because buyers started stepping in here around 130, and they pushed it right back up to 131.88 into the close, which was good for almost a $2 gain on the position. Didn't really do much here into month end, but looks okay above the 20-day moving average for now. NYMEX, these lower price names I kind of like to scalp a little bit. Had a lot of interest on Monday, and then it just started pulling back and consolidating, and it looked okay here above this these support level here. So I just kind of took a position in there. I was hoping it would get a little bit more traction above Tuesday's high, back over $3. Still looks like it's okay. So it's just one of these positions that I'm just holding on to for now. We'll see what happens in early August. If new buyers come in or not. Netflix, again, a leading stock, pulled back almost 2 weeks, held the 20-day moving average, which is always a good sign. Had this inside bar here. It showed up on the TA page scans as a consolidation day, doji day, inside day. So once it started making that move above 2-day highs, back above the support level around I believe it was 107, 108, and the volume started coming into the name, we just jumped on the long side here. And it's a fantastic swing entry, and it just kind of took off after that into the afternoon for a nice $3-4 gain. And as of into month end, got some more bids here, so we have about a $7 or $8 gain here. I believe we purchased the calls, 105 calls, which are I think they doubled in price, about 100%. And coming into Friday, Fridays on a summer afternoon earnings season, not too much going on, especially after the market kind of rallied. But this Etsy stock was one of these stocks that came up on the radar on our sites on Thursday. It was a recent IPO. Really looks like it was priced poorly. It really kind of just sold off the last few months, but started perking up here again in July. Um, so after the spike up 2 weeks ago, kind of consolidated here, just kind of sat there on my radar, broke out above 20, which would have been the most ideal entry on Thursday. So today coming in, I figured, it's a thin stock. Maybe the momentum crowds to get behind it. Earnings are next week on Tuesday or Wednesday, I believe, and I figured maybe we can get a nice squeeze, maybe back up to this high, or at least over the 22 level today. So we took a long entry on the opening reversal. You can see right here, stock sold off initially, went negative, and I was liking it right around here if it went back into positive territory. So we could see this is kind of what it looked like here over 20, 21 and a quarter was the entry signal, and just kind of chopped around. Got a nice little pop above yesterday's high for about a 50-cent gain, 60-cent gain, and it just started fading off after that, just kind of consolidating. It's Friday afternoon, not much is going on. And then eventually I just kind of scratched out the trade here for a small loss. Just not something I really feel like holding on to the weekend, knowing earnings are coming up either in the next 2 days. So maybe come Monday, if it squeezes above 22, it's worth another try ahead of earnings. But I'd only consider it for maybe a day trade or a quick scalp. Um, what else? And that pretty much wraps up the trades for the week. So thanks for watching.